Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amaduri, and we are dealing with one of the craziest Decembers in the market since the Great Depression. And we're going to talk about that today. I was going to take a break here during the holidays, visiting out in California. I tried to find a quiet spot here, and here we are. I wanted to take this opportunity to interview Jeff Berwick, the Dollar Vigilante, responsible for just educating people on freedom and anarchy, and of course his ever-increasing popular Anarchapulco conference in Acapulco, February 13th through the 18th of 2019. You got to check it out. Really exciting time. So we had a great discussion last interview. We talked about the markets, but also, life and the psychology, the abstractions of life and happiness. And we really got into some of these things, and it was a great discussion. But today we're going to talk about markets and gold and crypto. So Jeff Berwick, thanks for coming on the show with me today.
Yeah, it's my pleasure. Thank you.
Jeff, we've seen the worst December for stocks since the Great Depression. Trump is telling people to buy the dip. Obviously, the optics this Monday we saw with Mnuchin meeting the banks made everyone reminiscent of 2008, and the Dow fell 650 points, and obviously a lot's going on even today. So, with this in mind, what are your current thoughts on what we're seeing here? Is this a culmination or the consequence of everything we've seen up until now?
Yeah, absolutely. This is totally to be expected. It's been delayed longer than a lot of us thought it would have been. A lot of us thought 2015, 2016, 2017, this should have all fallen apart. We're now into the longest sort of bull market in terms of since 2008. It's been about 10 years. It's finally just starting to crack now. Very interesting timing in December. It's quite rare for the markets to do that in December, but a very interesting timing for that to happen. But no, this is absolutely was expected, especially when you have the Federal Reserve with interest rates near 0% for so long, and just starting to bring them up just a little tiny bit now, and even just a few percent, even 2%, can almost destroy the entire market, because this entire market's been built upon basically free credit, free money, for the last 10 years since 2008. And that's the only way they've kept us alive, is just by printing a lot of money, a lot of quantitative easing, a lot of keeping interest rates near 0%. We even had interest rates below 0% in places in Europe, which I didn't even think was possible. So this is all just natural and normal, and it has to come down. You can't have bubbles go on forever. They will eventually turn into hyperinflation if you continue to do that. And so that we're very close to that now. And so there's definitely going to be some repercussions for what's been going on for the last 10 years. And I think it'll be shocking to most people how bad it gets.
Yeah, and that's an interesting point you bring up. So we're now in the 20% correction territory for a lot of these stocks, the indices, and this is a psychological thing. And we got to keep in mind, the psychology of the bull market is what took us here. We had a record long bull market in stocks by certain metrics. And so we're really breaking down the psychology of this bull market. People are questioning, is this just a correction, or are we really going into something that's reminiscent of a 2008? Because that's our most recent major downturn that we've seen in stocks. So could you touch on the psychology, the mainstream psychology that we might be seeing with stocks at the moment?
One of the things that never ceases to surprise me, and I've seen a number of these booms and busts and these sort of bubbles and busts. I've gone through the tech bubble in 2001. I was expecting the housing bubble in 2008. And now we're basically just heading into the next one right now. And it never ceases to amaze me how, when you go on for a certain length of time, and these usually go on for, it seems about 7 years every time. And like I said, this one's gone on 9 or 10 years now, which has been surprising. But what happens is the longer it goes on, the more that people become very, very complacent and very doubtful that anything bad will ever happen again. And this seems to happen over and over again. I'm constantly amazed how short-minded people are. Because literally it's only been 10 years since one of the biggest financial crises in all of human history, and people are acting like, oh, well, it seems like that will never happen again. It's like, well, they obviously don't understand how any of these things work, because not only will it happen again, but it's going to be far worse because of all the debt tagged on and all the money printing that's happened since 2008. I believe in 2008, the U.S. government had a total debt of around $9 trillion. That was 10 years ago. Now we're over $22 trillion. It's almost tripled in 10 years, which is total banana republic level amounts of debt. And of course, the liabilities are even higher than that. And when you add them all up, it just is absolutely beyond the end of this sort of a system. And all these systems are bankrupt now. So really, when it comes to the psychology of things, and I've seen it myself personally, because I started to bring up around 2015, 2016 that we're getting close to this major crash happening. And of course, every year that we haven't had that major crash, a lot of people think I'm crazy and think I'm stupid. And so many people just kind of figure, well, it's been a while now, so I guess that we're not going to have any crashes anymore. And if they believe that, then they don't understand how central banking works, because central banks are set up to create these booms, bubbles, and busts, and for the Wall Street elites to profit off of them. And it seems just about every time the public falls for it, and the complacency is seems like nearly at all-time highs. People just thinking that there's never going to be any sort of major crash in the markets or anything along those lines, and people are just very comfortable right before the actual crash.
So it's interesting. Do you suppose we're going to see some major injection into the market, and will it mitigate? Will it continue to kick this can down the road the way we've seen for years and years to come? I mean, we've seen it up until now. Why won't they be able to re-inject this thing once again and keep it going for another 10 years?
Yeah, it is possible. If they do re-inject like they did in 2008, they're going to have to inject 3, 5, 10 times more than they did in 2008, because that's how much the debt's grown since then. If you're talking about those levels, that's really banana republic level money printing. That really will go towards hyperinflation very quickly. So yeah, they can print, and they probably will. That's what central banks do. They generally do that. It's only really in the late 1970s with Paul Volcker that they didn't fully do that, and that ended up with gold going from under $100 to over $800, interest rates going from a few percent to almost 20% in a matter of months, and things like that. So they could do something like that, but they don't seem to want to do that anymore. And plus, the system is so indebted now that if we had interest rates at 20%, every single thing in the world would go bankrupt, including the U.S. government and every company and everything, every bank, everything would go bankrupt. So really the only option for them now is to print more, and that's what we've been seeing since 2008. And yeah, they can keep it going a little while longer for sure, but it will become very quickly into hyperinflation at this point. We've reached the point of no return when it comes to money printing. And like I said, I believe they printed 10 trillion plus in 2008. So they're going to have to print 30 to 50 trillion dollars minimum just to keep this one afloat this time. That's getting beyond the levels of even anyone. Reality has to hit at some point. When you have that amount of money printing, it's going to go in hyperinflation. We've already seen massive amounts of inflation. We've seen it in real estate. We've seen it in the stock market. We've seen it even in the cryptos last year. A lot of that money went into cryptos, but we haven't really fully seen hyperinflation yet, like we've seen in Venezuela or in Zimbabwe and places like that. And that's because the U.S. dollar is such a bigger market. But if we get another round of money printing like we did in 2008 and a commensurate amount that covers the amount of debt that's been built since then, we'll be into hyperinflation within a few years, without a doubt.
So is this a dollar issue or a stock issue? Because I know a lot of us feel the stocks are overvalued. This was in the making, but in the overall picture, the underlying issue is the dollar, because that's what's at risk of getting hyperinflated. And to that extent, do you see stocks as a hedge against inflation? Because these are actual companies, right? And when companies are dealing with a depleting dollar, they charge more, right? It's almost like a hedge, if you will. What are your thoughts on this? Because I know a lot of people are back and forth on this topic, and in the balance of how to fully wrap their minds around it.
Yeah, the way I look at it is that anything tied to the U.S. dollar, the U.S. stock markets are all going to be collapsing in the next few years. So to look at anywhere in the U.S. as being a place to, stay safe from this collapse is a little bit crazy, in my opinion. Of course, you could get into precious metals in the U.S., but of course, the U.S. has been one of the countries in the world that has actually confiscated their citizens' gold in the past in 1933. I don't think they'll do it again because gold isn't as important as a thing in today's day and age as it was in the 30s, and it wasn't backing. It's not backing any sort of fiat money system today, so they don't really need to do that. But really, other than precious metals and cryptocurrencies, I would get my assets out of the U.S. for the most part, out of the U.S. stock markets, out of most stock markets, because really we're so globalized today that everything that happens in one place really affects another place completely. So when this collapse happens, we're going to see stock markets across the world go down. There's not going to be one stock market that's going to go up during that period of time. Now, if it goes up, it will go up in fiat nominal terms, but it won't go up in actual inflation adjusted terms. So as you pointed out, even the Fed here could print $50 trillion during this next collapse, and we could see the Dow go to 100,000. But at the same time, a Big Mac at McDonald's might cost $40, right? So, this is the thing that most people still don't understand is how inflation works. And that's why they continue to use it, because it confuses people and it doesn't allow people to understand what the real problem is. But the real problem behind all these things is the government and the central banks. The government's putting into massive amounts of debt, massive amounts of regulations, which destroy the market, massive amounts of extortion of their citizens, trillions of dollars per year in taxes are extorted from U.S. citizens, and then the central bank is destroying the value of the money all the time. Mm-hmm. So it's really like the governments and the central banks are just a all-force attack on the people, and until people realize that, they're just going to continue to do that and continue to destroy most people and continue to impoverish most people.
Yeah, and it's much harder to connect the dots with the wealth confiscation when you talk about inflation versus maybe a direct tax or just a confiscation of money in the bank, like a bail-in type of thing. So, Jeff, let's talk about gold. You mentioned it. We're in this correction period now, bear market, let's call it, crash, in the middle of a crash, 20% down in the overall stock markets. But gold is responding well, I will say. I mean, it feels good to see it up, but are you surprised it's not even higher than it is? I mean, we're looking at 1280, I believe, the last I checked. And, we were in 2016 at 1350, 1380 or so. And obviously going back to 2011, we're at 1900. I mean, still early stage, or is it just starting to get its momentum until it's in this full-blown bull market, explosive environment?
I said in the most recent Dollar Vigilante newsletter to subscribers that to me, the biggest no-brainer on earth right now is precious metals. It's gold and silver. You look at the stock markets, they've got a long way to fall. They could fall another 60, 80% easily. Now, of course, if they print money, they might not fall that far. They might fall 10, 20, 30%. But they're going to go down one way or another in real terms. Bonds are going to be an absolute horror show. We had basically a 40-year bond bull market that just ended in the last few years. And we're just going to see just massive amounts of devastation in the bond market. So when I look around, and the cryptocurrencies, of course, they've gone down dramatically. So I think they're an absolute buy at the moment as well. I started saying that when Bitcoin hit 3,500, which was actually our price target from about a year ago when it was around 20,000. We said it will probably hit 3,500, and it did. And a lot of people were very angry about that call. But right now, the two biggest things that will help you to survive and prosper through what's going to happen are actually both massively on sale, and that's the cryptocurrencies and the precious metals. As you pointed out, gold and silver hit peaks in 2011 that they're still far below. Silver was near $50. It's now under $15. Gold was near $2,000. It's now around $1,300. So it's really actually just a gift. And it's amazing. I've seen this before in other bubbles, that the things that you really want to be buying right before this crash seem to be like massively on sale right before the crash. Like it's almost like a gift from the markets. And so, yeah, absolutely. If you're sitting there and you've got mutual funds or you've got a retirement savings and you've got most of your money in the stock and bond market, you're going to get absolutely destroyed over the next few years unless you get those into things like precious metals, which we recommend about 60 to 80% in precious metals, about 20% into cryptos. Cryptos are, of course, a lot more risky, and you have to be a lot more careful with them. Gold is a lot easier. But yeah, no, this is the best time almost ever to be buying precious metals. Now, of course, how you buy them is tricky because most of these ETFs don't actually have the gold and all these sort of things. So you really want to be purchasing actual gold that you can hold, or actual something that's not held with a government or a central bank or anything like that, because all those will be wiped away in the next couple of years. So you have to be careful about that. But in general, those are the things, in my opinion, right now to be holding is precious metals and the cryptos. And for people out there who haven't started buying these things yet, you've got an unbelievable opportunity right now to be getting in right at basically what the bottoms are going to be. And these things are going to do absolutely massively well over the next few years.
I would agree with you wholeheartedly, and I would echo what you would say to my listeners. But one thing I would, to facilitate this conversation and to extrapolate this thought here, it does seem like over the longer term, there is this upward bias with stocks. Stocks just tend to go up for whatever reason. You got the inflation, you got the conventional media behind it. Precious metals have this downward bias almost. If things are kind of flat, or if things are good, it just seems to have this, especially over the last few years, this almost downward or stagnant bias. And then, you have epic chaos right now in the markets. It goes up a little bit, but then all of a sudden, maybe we go back into some more stabler times, and then it just kind of gravity starts to take over precious metals. That's what we've seen since 2011. Do you have any thoughts on that? This idea that there's this upward bias with stocks and there's this maybe downward manipulative bias with precious metals?
Yeah, absolutely. Obviously, the stock market is a major recipient of all the inflation, obviously. Really, precious metals, gold in particular, really most people only think about it in like absolutely dire situations, like at the end of the 1970s, where we thought the entire fiat system was going to collapse, and it was very close to collapsing, or even 2008, right around then. A lot of people thought that was the end of the financial system. They managed to keep it alive till now. But it's really only in those like incredibly dire circumstances that some people think about gold, and they've done a really amazing job of propaganda to get most people to think like what Alan Greenspan said, that gold is a barbarous relic, that there's no point in ever owning gold. It's really quite amazing how good their propaganda is, especially when you look at, they actually talked to financial advisors in the US, and they did a bit of a poll, and they said, what do you think about gold? And every single one, there was not one who liked it. Every single one said, I would never tell my customers to ever buy gold. That's crazy. That's stupid. You have to get in the stock market, get in the bond market. It's really interesting because over the last 20 years, since 1998, gold's actually outperformed the stock market. It's outperformed the bond market. It's outperformed most markets except for the crypto market. Yet your average person thinks that gold and silver are just something that you would be crazy to ever own. So they've done an amazing propaganda campaign on that. But we will see the whole reason this whole thing's coming crashing down right now is mostly because of the dollar. The dollar is going to have major problems, especially with a lot of stuff Trump's doing and all the trade wars and all these sort of things. Plus, the whole thing's dead to begin with, just the amount of U.S. government debt. This whole system's going down. So as it does, gold's going to do incredibly well. But your average person won't know. Your average person will go down with the ship, so to speak, because they watch the television program and they watch CNBC, and they don't talk about anything good about gold there. They say cryptos are going to zero, basically. They're trying to talk people out of these things and trying to keep them in the market where they're going to get absolutely destroyed. And so, your average person probably will never figure this out. It'll be too late by the time they figure it out, and that's usually the case.
Jeff, in your experience with markets, what are your current thoughts on crypto? I know you alluded to it, but I'll preface it with this. Now that we are in the belly of the bear market and we don't have the wind beneath our wings with that skyrocketing upward price, what are your thoughts on this? How bad can this bear market get, in your opinion? And even once we bottom, just like we bottom with precious metals in December of 2015, do you suspect it could feel like a bear market even beyond the bottom of crypto here?
I actually think we're pretty close to the bottom now. I think we may have already bottomed. And we actually, as I said, we pointed out around 20,000. We said that we expected there was going to be a major pullback this year in 2018. We actually put a price target of 3,500 on Bitcoin. And it just recently hit that. Yes, it could go lower, but the way I look at the market right now, it got just absolutely devastated. It was over $800 billion total market cap on the cryptos 1 year ago, basically today. We're now at 127 billion, and we just hit 100 billion just about a week ago. So that's down from 800 billion to 100 billion. You can do the math. I'm guessing that's like about 90 some odd percent there. And that's about as bad as it gets in these sort of markets. We've seen certain ones get just absolutely destroyed. Bitcoin's actually held in the best of all of them. But they've all been absolutely wiped out. So Bitcoin hit 20,000 about a year ago. We're currently around 4,000. We could see Bitcoin hit like 2,500 or 2,000 in an absolute panic if we see crazy stuff happening that no one expects, banks collapsing. For a few days, there could be just a total panic, and these sort of liquidity panics happen when everyone just panics. We could see something like that, but that will be the absolute time to buy as much as you possibly can, because as soon as that panic ends, people are going to realize that most of these banks are bankrupt. Most of these systems, these governments are bankrupt. These central banks are hyperinflating the currencies. Where are you going to go for safety? And it's basically precious metals and cryptocurrencies. So once they realize that, these things are going to take off dramatically. But as far as the bottom, I think we're pretty darn close. We really called it as a bottom about a couple weeks ago when we hit about $100 billion market cap. I can't see it going too much lower, although in a panic it could. So if we do, let's say it could be this week, really. It's that close. Let's say in January, the U.S. stock market goes down 50% in January. A lot of banks start to close. A lot of people start to panic. There's like lineups around like ATMs and stuff, and people are like, it's not working. We could see cryptos go down during that period of time, just as everything else panics, as everyone panics. We could see them go down, and then we'd see them take off dramatically over the next few years as people realize that's one of the only things that can save them from this ongoing crash and collapse, is to get out of the dollar, out of the stock market, out of the bond market, and into things like crypto and precious metals.
Yeah, it's powerful. It's one of the things that I've been actually accumulating lately. I really like Bitcoin especially. But having said that, is there any cryptos in particular that have your attention? And do things like Bitcoin Cash and these derivatives of Bitcoin Cash, and the fact that we can have multiple variations and this discord within the community, does that bother you at all with something that's supposed to be sounder money?
It doesn't bother me because I'm a anarcho-capitalist, and I'm always in favor of whatever the market wants to do. And this is a free market, and people can fork away from various cryptos if they want to. So I can't be too against it. I can't be like, oh, we should get the government involved to stop people from forking or something like that. I'm an anarchist. I would never do that. And I also believe the market.
Let me jump in there. And the only reason I say that is because, as opposed to something like precious metals, which is sound money and bound by chemical and physical law, we have that faith in it that, hey, this cannot be, there's no government per se that's controlling gold, but it's just bound by something chemically and physically. And I love crypto for a lot of reasons, but for the simple fact that, one day Bitcoin has people's attention and the next day everyone makes a right turn and goes somewhere else. Sure, everyone has the freedom to do that. But from an investment perspective, do we put our wealth and trust into something like that?
Actually, I think that's a good reason to put your wealth and trust into a system like that, because it really shows that the system's able to move in ways that people want it to move. So if some people are unhappy with Bitcoin, they don't think it's fast enough, someone else can make a faster Bitcoin. I think that's great. The real key with the cryptos is to be really smart about what you're investing in, because they move so fast. This is the most dynamic market, I think, in world history. And it's one of the fastest growing markets too. When you think about it, Bitcoin is still less than 10 years old. It was founded in 2009. We've had the total market cap of all cryptos, based on the first one being Bitcoin, of almost $1 trillion within 10 years. We saw the ICO market, the initial coin offering market, just start about 2 years ago. Within 1 year, it dwarfed the size of Wall Street. So this is a massive, massive sector that came out of the blue. That's its own sector now. It's a new asset class, essentially. And yeah, it's absolutely dynamic. If you don't know what you're doing, you can get totally wiped out. You can lose all your crypto if you don't know what you're doing. You have to be very smart. This is really the free markets on steroids. You have to take responsibility for yourselves, and you have to learn about these things. So don't be investing in cryptos if you don't know much about cryptos. One of the best things to do is subscribe to something like the Dollar Vigilante newsletter, where we tell you the best information we've got on them. So you can do that at dollarvigilante.com/subscribe. But really, you have to be quite careful. It's quite dynamic. I personally, I find it a bit irritating. There is all these forks. Because it hurts the brand of these coins a lot, and it's really hard to explain to your average person what's going on. And we're not going to have these cryptos become something that takes over and become the currency of the world and get rid of fiat currencies and central banks until they've sort of stabilized to a point where people can kind of understand what's going on. But we're still in the very early days. When you think about it, really most of these cryptos weren't around 5 years ago, even 3 years ago, 4 years ago. Most of these cryptos that I'm looking at in the top list here, like Ripple, which isn't even really a crypto, but Ethereum was around about 4 years ago, I think they really launched. EOS wasn't even around a year and a half ago. Bitcoin Cash wasn't around 2 years ago. So these are all, this is amazing how fast it's all moving. And you have to be very careful. And, some of these are going to go to zero and some of these are going to go up dramatically. And so it's really a matter of being smart. But the real important thing to me is that some of these, or at least one of them, ends up being used as a type of money, or at least currency, worldwide by the majority of people. If we can do that, we can get rid of central banks and governments. And we're not going to do that until we get some sort of less volatility in these things and some sort of stability. And how that comes about, I'm not sure, but it's going to be at least a few more years before that happens. At the looks of things, we're having like so many minor wars going on, and even Bitcoin Cash is having its own forks and minor wars going on now. And that's a fork of Bitcoin. So it's unbelievable. It's amazing to watch. And for people who are interested in just watching like some of the most interesting things in the world happening, check out the crypto market. It's not boring whatsoever, and it's like I said, the free market on steroids. And we'll see what happens. But I'm very bullish on them. But what actually turns out to be the winner is really tough to predict at this moment in time.
Yeah, I would agree with you. And to echo what you said about things moving fast, I mean, even when Bitcoin moved to 3,200, I don't even know how long it was there. It goes to show it's very difficult to catch a window where it goes down, and it's disingenuous to be like, oh, you were able to buy at 3,200, or large amounts of people were able to buy at 3,200. I mean, I bought a little at 3,500, but right now I would say as a whole, this is a window of a bottoming out period, a time to accumulate, because let's be real, it's very difficult to catch it at 2,500 and it V shapes in the middle of the night, right? But that's why things move fast, and you got to have a more longer term open mind on this. And I would echo what you're saying. If you are interested in crypto now's a good time to start to accumulate and to get in. And if you haven't got in yet, it's probably a blessing that you weren't in January or February of this year. So Jeff, I'd like to give you some opportunities here to close us out, maybe share some final thoughts with us. Let everyone know about the conference, of course, and of course the Dollar Vigilante, all that you do. And thank you so much for coming on Crush the Street.
Yeah, thank you. You can find us at dollarvigilante.com. We actually have our annual conference coming up for the Dollar Vigilante called the TDV Summit, coming up February 12th and 13th in Acapulco, Mexico. And then right after that is in Acapulco from February 14th to the 17th. And actually during all of Acapulco, we're going to be running CryptoPoco. So it's going to be basically a cryptocurrency event all the way through from the Dollar Vigilante Summit to the end of CryptoPoco, which is a total of 6 days from February 12th to the 17th. So that's definitely the time and place to be in Acapulco, Mexico. There's so many freedom-related people going to be there. Of course, we have Ron Paul speaking. We have Judge Napolitano. We have Doug Casey, who's a favorite of mine. Even people like David Icke, who's just talking, he's got a massive audience worldwide, talking about conspiracy theories, about what's going on in the world. Basically anything to do with freedom and things like that are down at Acapulco. And it's just a massively growing event. I think no one's going going to be disappointed if they come this year, and it might sell out soon. So you might want to purchase soon. We're only accepting up to 3,000 people this year. We had about 1,500 last year. So it's been doubling every year. And this year is going to be the best one that we've ever done. We've taken over the entire hotel at the Princess Hotel in Acapulco, 1,000 rooms. We bought them out, and we're going to be doing a lot of interesting things to show people basically total anarchy for a week on the beach in Mexico.
All right. Well, if you guys want more of Jeff Berwick, check out his work at the Dollar Vigilante. Jeff, thanks so much for coming on crushthestreet.com.
My pleasure. Thank you.